Today is May 26th, 2021, and this upcoming weekend is Memorial Day weekend. So the market's closed on Monday. So we're headed into a holiday weekend and kind of hard to know what to expect. The market seems like, well, it's been kind of, we've had some ups and downs, quite honestly, since last week. We've had, a little bit of a sell-off and then kind of a big rally, and then the past couple days, actually yesterday, the market's kind of started off strong and gotten a little bit weak. So today, same thing. Everything started off a little bit strong and then kind of got a little bit weak. But I mean, the numbers are small. S&P's down 2. I think early it was up 7 or 8, so no big deal. And of course, the Dow and the Nasdaq seem to be disconnected. The Dow's down, the Nasdaq's up, which is the opposite of how the day started. So that's kind of odd, but and of course, there's we've basically made it through earnings season without too much craziness. So we'll dig right into things here. As opposed to a few weeks back, we have quite a few open positions now. And that's just basically sort of a function of the market cycles, right? So we did get a pretty decent pullback. We had a lot of stocks on the pending list, and there you can see it right there. So when was that? That was on 5/19. Today's the 26th. So 1, 2, 3, 4, 5 trading days ago, we had this little bit of a sell down, and you can see there's a little bit of a higher high there. This is the SPY. So yeah, you can see yesterday the market opened and then basically went down, pulled back a little bit, still above the prior day's low. Today we got a pretty narrow range, but same sort of thing, a little bit of a gap up and then a push down. So, it's the old saying, it's a market of stocks, right? Because I'm looking at our open positions here in my Thinkorswim on my other computer, and a couple of minutes ago they were all green, even as the market was starting to sell off, and a couple of them, one of them actually has gone a little bit red, but not by much. On the S&P here, actually on the SPY, I've taken the liberty of drawing this trend line, which actually goes back. I started off connecting these two lows here, right? The low from, I mean, those are the lowest lows on the chart if you go back, a ways. And so I connected those and then extended it all the way back to basically the March bottom, and it seems like it's a pretty good fit, right? There's basically one day, like the capitulation day, quite honestly, is what that was. That was the big sell down, and then it was like a capitulation day, and then look at the following day where it gapped up. So this trend line that I drew kind of intersects with the high of that day and the lows the previous day, and so it kind of makes sense. So it makes the most sense because it connects these two lows. So anyway, here we are, within 1 or 2 days of a rally within the all-time high, so no big deal. I think around the lows of this little dip that we saw was probably around 3%, and so no big deal. But of course, like I said, not only do I don't know what happened there. Not only do individual stocks seem to be trading in their own universe, right? All the different markets are kind of a little bit disconnected. When I talk about the market, I'm typically referring to the S&P 500. So, but then, there's the Nasdaq and the Dow, and you can see the Nasdaq Nasdaq, look at this trend line. That's pretty amazing because, about a week ago when we had that big gap down there, it literally tagged that trend line, literally tagged the trend line, and then rallied from there, and it's been back up. So the Nasdaq is the first of the indexes to touch the rising trend line, which I think is kind of interesting. And so, Nasdaq's a few rally days away from an all-time high. Now, you could look at this and say like sort of a head and shoulders could be building, right? And speaking of which, the Russell 2000 has really just been, this was kind of, I mean, head and shoulders patterns are typically fairly unreliable. Sometimes after the fact, you can look back and say, "Oh, it was a clear head and shoulders," but I've seen so many head and shoulders on so many different time frames that end up, turn out to be nothing. And the fact that, all the markets are within shouting distance of their all-time highs. So obviously all the head and shoulders in the past, never amounted to much. But anyway, so the Russell 2000 just seems to be doing something, biding its time, just sort of trading in a sideways range. It's sort of going nowhere, right? And so I don't know what to make of that. I mean, on a day-to-day basis, sometimes the small caps seem to be like really weak, and then other days they have these big rallies, and the percentages are incredible. So on some of them anyway. But anyway, last but not least, INDU. Finally getting used to this new charting platform that I'm using here. So I've dispensed with the old outdated free stock charts, and I've moved exclusively to stockcharts.com. And the nice thing about it is that we're actually, as opposed to like the last, well, probably this year, the free stock charts used to have real-time data. For all the years that, probably 10 years that I've been doing shows, the free stock charts always had real-time data, and then somewhere around the beginning of this year, they quit doing that, and then I couldn't pull up. The last straw with the free stock charts was when they no longer allowed me to pull up the SPX, the actual S&P 500 index. And so I had to pull up the SPY, and that was getting annoying. And then, of course, for some time now, that thing's only worked in Internet Explorer, and so that was the only reason I opened IE. But anyway, long story short, I mean, obviously, StockCharts.com is one of the preferred charting platforms out there, other than your broker's platform. I've told most people for years that the charts that you want to use are the ones that are on your broker's platform, obviously. But sometimes there's some drawbacks to that. I think Thinkorswim's charts, they're clunky, and I mean to try and mark them up and draw and do a show on that, it would be next to impossible, because the way that they have their cascading menus for indicators and that, and trend lines and all that, drawing on those charts is a bit challenging, and it can be frustrating too. And so there's just no possible way to do that. But they're actually, obviously, your broker's charting platform's obviously superior, but I draw some things on my Thinkorswim charts, and then I just kind of leave them. But anyway, so here we are. We're looking at the Dow, and the Dow is basically right up at the all-time highs also. Down a little bit, but we had that crazy sort of reversal day back there. And if I change this to a candlestick chart, boy, that day sort of sticks out like a sore thumb, right? And so it's actually kind of odd to see that candle and this hammer, right? and I mean they just kind of stick out to me. And here the price is sort of trapped in between, right in the middle of those two. So I've never been a big fan of the Dow anyway. It's remarkable how it actually, well, there's such an overlap of stocks that, in these large cap stocks that comprise the majority of the market anyway, they overlap, these indexes. And so I haven't seen what the stats were lately, but the the Facebook, Amazon, Microsoft, Google, those stocks, Apple, make up a large part of the major indexes. And so that's why, that's why under the surface there can be a lot more going on than the indexes are reflecting. And so, hey, back here a few weeks ago when we had this little pullback, it seemed to me that a lot of, well, everybody knows a lot of the growth and momentum stocks or whatever, they were significantly off the highs and still are. I mean, a lot of them are. The one I like to look at is, been looking at this for a while, is this ARC, right? ARC is theoretically, ARC is like the poster child for momentum tech stocks, theoretically. This is probably a better reflection of the average stock, or I'd say the average momentum slash tech stock, than any of the indexes. So getting a little rally here, rally off the lows, and so that's kind of and quite frankly, this little down cycle here and the consolidation and the rally. If you'll notice, well, I'm sure you probably noticed that the majority of the new open positions, the new open trades that triggered in are technology related stocks. So anyway, let's dig right into them. Let me see if I can move this screen around. Here's the open trades right here. And, well, actually, I don't need to move the screen around. So I thought we'd just go down the list here, take a quick look at the charts and that. And I did take the liberty of marking everything up on the charts. And so we might as well just start at the top and take a look at Intel. Now, there's a couple little weird things about these charts, right? One of them is that I have to do quite a bit of actual moving around, like zooming out, pulling down, that type of thing. And then they revert. So I've actually found a few minor things that I don't particularly care for about the stock charts, but the other thing is this font size. I haven't figured out how to make that font size nice and small. The other thing is if I move this, if I just grab that and try and move it, right, then all my drawing tools pop open over here. And then if I want that to stay there, I got to save it. And I got to click an extra 4 times just to move that. So that's one of the sort of annoying things. But anyway, there you go. So there's Intel. Intel's been open since let's see, 5/21. Interesting. Intel was actually on the pending list for quite some time. I think it was when we were down to just one pending stock, it was Intel, and it was on there since before this last little dip, but it's trying to, looks like it's trying to rally back a little bit. It's if you zoom out to a little bit longer time frame, you do have a pretty nice, it's a big sell down. That was an earnings gap, and then you got the change in trend there. Now you can't see it, but hang on, let me pull this chart up a little bit. So I have my indicators like I'll have on this chart. I've got RSI down here. You can see how the RSI got oversold, down here, and it's starting to come back up. So decent little change in trend. This little pattern right here is a bit reminiscent of back over here, which would have been, I guess, last fall. That looks like an earnings miss, and then it dropped down for a bit, and then you can see the RSI got really oversold, and then basically it rallied back from there. And so be looking at something similar here. So it's not too bad. Not too bad of a looking chart here. Intel is not a real exciting stock. It doesn't move a whole lot. Let's move on. Oh, and by the way, something I want to talk about on the rest of these charts here, which I don't believe I actually marked on Intel. TSEM, semiconductor stock. There's a few semiconductor stocks on here. So when I was getting my feet wet, marking up these charts here, initially I would draw the line and then put in the stop, and the same with the trigger, and so they showed up in green. But when I went through some of the other ones, you'll see that I like my text to be in black. But so there you go. What I wanted to point out here is this. So there's the trigger, 2670, and I'm not going to bother to drag that down, because then I got to go through all that saving and all that stuff again. But what I wanted to point out here was, so the stock closed the day that it triggered in, closed fairly significantly. Well, I won't say fairly significantly, but it closed above the trigger, and then the very next day it opened up here. And the trigger was 2670, and this open was, it was, you can see it up at the top there, 2734. Right up here, you can see it, 2734. So here's what I wanted to point out is that the target that the system is showing is 2830. And as you guys know that have been around for a while, the way to, if you decided to jump in just right at the open, see there's several ways. We've talked about this at length, but there's several ways to do it. One is you can just buy the position at the open the following day, in which case all you need to do is compensate for any gap up and or gap down, right? Theoretically, like this stock could have opened at 26 60 or something, and so you would have as long as it traded above 2670. Now, if it gapped down to 2650, you would hold off on taking the position until it moved up to the trigger, right? Like if the following day it gapped down and just tanked, you wouldn't want to buy it. So if it gaps below the trigger, you wait for it to hit the trigger price. If it gaps up over the trigger, you have a couple options. You can just buy it at the open, in which case you want to compensate by adding the difference if it gaps up to the target. And so that's basically what I've done here is that's the compensation target if you just pulled the trigger at the open there. And even if you pull the trigger at the open, that's not necessarily the price you're going to get filled at either. Like what this chart shows, because I see it all the time, I see a stock open and the first print is the first print is a gap up like this, and then like 10 seconds later when the stock actually starts trading, it's down a little bit, it's pulled back a little bit. Sometimes there's just a weird, well, a lot of times, the first couple prints or whatever are those people sometimes get hosed because you have market on, market on close orders, and buy it on open, sell on open, buy or sell on close. And so sometimes the market makers, they don't always give those particular standing orders the best price. So anyway, um, don't sweat the small stuff. I don't. I've always said don't sweat the small stuff, because typically the ones that work are they're going to blow through the targets and then some, right? And the ones that don't work, a couple of percent here, there's not going to make a huge difference in the long run. And so don't sweat the small stuff. I don't worry about the gaps. So getting back to what I was saying before, you have several options. One is you can just pull the trigger at the open, not sweat the small stuff. The other one is you can say, well, I'm going to take a half a position at the open and then set a limit order to get filled at the trigger price for the other half, because quite frequently, but not always. See, you run a little bit of the risk that the stock just takes off and never looks back, right? And you won't get filled. And so that brings me to the third option, is set a limit order at the trigger price, good till canceled, leave it in for a few days, and something like this, you could still have a limit order in at the trigger. And so if the stock takes a little bit of a dip, you get filled at the trigger price, and then everything matches up, all the percentages. But I had somebody suggest that we use the actual open price, but like I said, it's there's gonna be slippage. There's gonna be days where it gaps down below the trigger price, and so the open price wouldn't be the price that you bought it at, right? So originally, when Jeffrey programmed the back end system, he had it when a stock actually triggered in, like on the evening update, the updates that have been coming at night, then he just added them straight away to the open trades as well as the trigger trades. So anyway, it's all relative. But as far as this particular one goes, there's the actual compensation target if you decided to pull the trigger to higher price. And I've marked the compensation target on the rest of these too, by the way. So bigger scheme of things, I like to zoom out on the charts and see what the pattern looks like. And there's a couple of it's really kind of interesting. This thing sold down and then bounced, and then it formed like this sort of W right here, but it never was able to break above sort of the middle of it. It took another leg down. And so it's had a pretty good sell down, and then you got a little bit of a rally going here, and so all it needs to do is extend that rally for a bit. The initial stop on this hasn't moved yet. It's still down here below the recent lows, but it's going to take a little bit more forward progress in order for this initial stop to move up. But a couple of them, the initial stop is basically still in place, and then there's a couple other ones that the initial stop has already moved up. So it's a function of price and time. This one, if I zoom in here, this is actually so the trigger was 127.50. The open, you can see the following day was up here, right? About a little over 130, and so, well, you can see by this it was $2, and this is expensive stock, so $2.61 gap up, excuse me, right here. So that's where the compensation target comes in. You can see it's rallying pretty nice. This was an interesting one because it basically had this gap down and then this sort of long range day rally, which kicked off a series of rallies. So this has got a really good look to it. The reason not to sweat the small stuff is because I'm going to say, well, I hate to throw a percentage out there, but I'm going to say the majority of the time, from what I've seen, the majority of the time that the stock is able to make it to the target, it's also able to make it to the compensation target, where you compensated for the gap up, any gap up, or paying a little bit different. And see, there's a good chance you're not going to get filled right at the exact open price anyway. And quite frankly, even if you just said you were going to buy at the open and you waited for a couple of minutes and ended up, like getting in at the high of this day instead of the exact open price, there's going to be some slippage, right? But in the big scheme of things, it's not a big deal because it's all gonna even out. And like I said, the ones that work, something like this, easily push through both of these and then some. And so that's when they end up working, and it doesn't matter. This little minor gap here is not going to make any difference at all. So far so good on Silicon Laboratories. Got a good look to it, and quite frankly, it looks like this rally is sort of just getting started here. I would expect within the next day or so, this initial stop's going to come right up, really close, quite frankly, like probably right up under this day where it triggered. So it's there's another one on here that I think that I noticed when I was looking through these that looks like the trailing stop should have moved already, but it hasn't. And it's a function of both price and time. Just because the price has moved away from the trigger price, sometimes like a day or two needs to go by before the trailing stop will ratchet up. Not a big deal. I mean, obviously the chance of this, coming all the way back down here is very slim. So anyway, I expect to see the initial stop move up on this, fairly close to the trigger. It won't be a break even yet, but this is the volatility of this particular stock. One big up day put it through either one or both of these targets. So anyway, that's what the compensation target's about. Don't sweat the small stuff. Let's move on here. Quite frankly, I'm surprised that here's a good example. There's a good example right there. I'm surprised at how many semiconductor stocks hit this list. And I mean, that could just be a function of the way that I should have looked at the semiconductor index, but that may just be a function of the way that the semiconductors have been acting as a group. But so here's another semiconductor stock, and so far so good. What was kind of impressive about this one is, change to a candlestick here. Big bullish engulfing candle set the low. Typically, I like my candlesticks filled in, but if I were to fill these candlesticks in on this, I don't think it would save that. So I would have to save my default configuration as filled candlesticks or whatever. And quite frankly, when I'm looking through charts, I prefer the open, high, low, close, but that's a whole nother story. So anyway, there we go. Yeah, this is the one I was talking about right here. This initial stop, as of the close yesterday, looked to me like, man, this stop should have come up here. It's going to be somewhere between 44 and 45. But my guess is that unless it goes negative today, I mean, unless it drops below yesterday's low, my guess is this stops coming up after the close, after the update, I should say, tonight. So there you go. So here's another one that kind of ripped through the trigger price. The trigger, is, I want to reiterate this for any new member that's confused. The trigger price was not really designed. I mean, it sounds like it was, but it wasn't really designed by Jeffrey anyway. This way he explains it. as the price that you necessarily need to buy it at. It's basically the stock needs to close above this resist. It's like a barrier resistance point. It's the level that when you finally get a change in trend, it confirms the change in trend by getting a close above the trigger. That's what confirms the change in trend, and so that's kind of the way to look at it. If I could draw a trend line down across these highs, you could see that basically, basically that trigger price was like would be just above that trend. Well, let me do that just for the fun of it. See, this really is challenging, but it's challenging and a little bit annoying the way that just the way that it kind of acts. And now I have to hit save, and now I have to select my watch list and save, and so a little bit extra fooling around, but I'm getting the hang of it. So there you go. And of course, this is not necessarily, well, it's probably not at all necessarily why the system calculated it this way. It's more of a coincidence because the back end system is using open, high, low, close, all that good stuff. But it's not like saying, hey, there's a trend line here, and so if that trend line gets broken, then we're going to get long. That's not the way it works. You'll see that on one of these upcoming ones, how that works. But anyway, it's amazingly, over the years that you guys have seen me mark these charts up, it's amazing how a lot of times what's happening is consistent with just standard technical analysis, right? Breakouts, through resistance, or a lot of times you can draw a really nice trend line and you'll see that the trigger is basically a breakout of the trend line, but that's more of I guess that's more of a coincidence, and that's sort of how technical analysis works, and the system is kind of programmed using obviously the same data that all this stuff is. But anyway, long story short, so there's that compensation target way up there, right? So this one triggered in quite a bit higher, and not a huge big deal. And here's a good reason why you don't necessarily want to just go through and set all your. The thing of it is, if there's a whole bunch of stocks that are triggering in theory you could, you can pick or choose, or in theory you could go and set limit orders at the exact trigger price just to see which ones actually trigger in. And those are that's one way of, instead of picking and choosing, there's several ways of picking and choosing, but one is that when a stock's triggering in, the table will show the average range, the volatility of it, and so that's one of the preferences that you can use. The other one is you can look at the charts. But yeah, I mean, we expect that people are going to pick and choose, not necessarily get in every single one. But so this one is hit. It's tagged to the target, but it's got a ways to go because it needs to theoretically hit this compensation target to compensate for, it blasted through the trigger on a long range day and then gapped up the following morning. And so that's fairly significant. They're not all going to be like that. This initial stop will come up after the close tonight. I'm certain of it. Moving on, BRKS. It's got a pretty good look to it. Zoom out a little bit. Yeah, this one had a relatively shallow pullback from the high, and nevertheless, shallow pullback. A little bit of kind of bottomed out here, a little change in trend. This is another one that essentially triggered in right after a bullish engulfing candle there. Might have happened on the same day as, I believe it did happen on the same day as the other one. And, so far so good. It's managed to, and it only gapped up just a little bit. well, actually, I'm sorry. Yeah, it gapped up from this close a little bit, but still significantly over the trigger price. And so, um, if you bought it this open, this would actually be the target, which is actually pretty close to the high. But based on the ranges of these bars, and that's what everything's based on, the way that the system calculates the ranges, it takes an entire month. I believe it looks back an entire month and then eliminates the narrowest day and the longest range day, and then takes an average of all the rest of the days, and that's our own little hybrid average range, which most ATRs are based on ATR 14 is like the default ATR, but obviously the bigger the data set, the more accurate something's going to be. So it's kind of interesting that Jeffrey decided to use a monthly ATR with the little hybrid strategy that I mentioned. But anyway, my point is that the range of the average bar here, before it triggered in or whatever, puts these targets within just a couple of days of a decent little rally. So far so good. Looking okay here. It's trading above the. That's the important thing right there. It's trading above the open from the day that it would have triggered in. Now it actually the trigger was 93.90. The low this day was 94. So it didn't trade at the exact trigger price. It came within 10 cents of it. So that's pretty close. But if you had a limit order in at the trigger price, you would not have gotten filled. So that's why sometimes it's better to just not worry about that. Moving on, Autodesk. Now here's something weird about Autodesk. Let me zoom this out for a minute. Yeah, here's one that I was just talking about. I was just talking about the trend line breaks or whatever. So here's one that's in like a big triangle pattern, and you can see that it triggered in well before any sort of trend line break drawn across the highs. I got some noise going on in my. All of a sudden, one of my computer fans decided to make a bunch of noise, which it hasn't done in a long time. Um, So yeah, this and it didn't necessarily trigger in, right at the bottom of this big pattern here, but it is what it is. So you can see that there's a lot of standard technical analysis would look at something like this and say, okay, if it can break out of this triangle, then you got something. But you can see that the trigger and the target are just inside the bigger pattern. um, There's the compensation target up here. It's very expensive stock, and so yeah, I mean the open the following day after it triggered in was $4 and something. Percentage wise is probably is pretty reasonable, and so this is one where the trailing stop has already moved up. So you can see it's poking at the target right now. If you were filled, like according to the standard way that we have everything set up, where you just wait for it to trigger in, buy right around the open the following day, well then obviously it's got a little bit more work to do. And it's kind of interesting too, because I was noticing when I was marking up this chart, it did definitely dawn on me that it's going to need to break out of this triangle pattern to hit that. So, but my thought is that if it does break out of this pattern, you may actually see some buying. Anybody that's watching this thing and waiting for it to break out, you may actually see some buying right around the breakout there, which would rip it right through that target. And so, one thing I want to point out real quick here is that no matter how you decide to take the entry, you still want it. You don't want to fool around with trying to compensate on the trailing stops. Like still just use the whatever the system shows for the trailing stop. Just set your stop there, and then you can adjust it as the system adjusts it. And so there's no need to get complicated there the way that it works. So it's got a pretty good look to it, well on its way. And keep in mind that most of these open positions here have only been open for a few days, right? I mean, the majority of these things triggered in on 520, and we had a weekend in there. So today's like the today's like the fourth day basically of these things having open positions. One thing I wanted to point out about Autodesk is, and this is going to be a weird one. So, oh wow, earnings are, what is today's Wednesday? I just checked this. Earnings on 5/27 after the market closes. So basically, this one's going to get closed tomorrow morning. And I'm glad I checked that. So that's important, and I'll tell you why. When this thing triggered in, I always go through and I look at the earnings dates, and it said that the earnings were going to be on Friday after the close. I think I'm sure. Yeah, it was. I thought it said that it was going to be Friday, and sometimes they change, right? And so it looks like this may have gotten pushed back a couple of days because, interesting. So, anyways, keep that in mind. So this one's not going to have a chance to work itself out. And out of all the stocks on this list, it looks like this is the only one. Let's see, Marvell's got earnings coming out, the end of the first week of June. But yeah, this Autodesk, the earnings are tomorrow after the close. We don't hold a stock over earnings, so what's going to happen is this is just going to get closed using tomorrow's opening price. And I don't need to go into a big long explanation about why we do that. So I do remember when this thing triggered in, I was debating whether to let it stay on the list or not, and I figured, well, since earnings are a week away, why not? you know. But that's something to consider. Usually right in the thick of earnings season, if I see a stock like hit the triggered list and then I pull up the earnings and it's like, within a few days, typically within, 3-4 days or whatever, it'll get deleted off the triggered list before you ever even see it. So if you're keeping a close eye on the pending list, like if you watch that pending list like a hawk, be sure that you're checking the earnings dates on the stocks, because we don't check the earnings dates. The system doesn't really have a way to check the earnings dates. So that's like a little manual sort of thing and I don't check. Sometimes the pending list can be humongous, and earnings dates are published at different times. What I've noticed with Thinkorswim is that it'll show like an earnings date a few weeks ahead of time, and then that date is frequently changes, and so it just becomes a big hairball. So anyway, my point is that obviously you want to be aware of the earnings dates on these things, and we have the system set to close it ahead of earnings just because we don't want any big surprises. Stocks like Autodesk, quite frankly, they tend to like have big earnings pops or whatever. So, but don't let me convince you to try and hold this thing over earnings regardless, because you have no edge. There's no edge to holding a stock over earnings. You could be up or down, double digits overnight. The thing could gap down, 12% or as soon as the earnings come out, and then the next morning it could open, up or down 10%. So it'll get closed with a small gain using tomorrow's open, and that's just the way that we do it. All right, we're almost done here. There's Twitter. Twitter looking pretty good. You can see the targets. The compensation target, the trailing stop has moved up. It's starting to poke up into that gap, and so quite frankly, it's looking pretty good. Right? I mean, it's kind of I'm not a huge fan of stocks that have these gap downs on earnings, but you see a lot of times, and I believe I pointed this out when we looked at it initially, is that you had the same thing over here, big sort of earnings gap down, and then they bottom out, turn around, and don't look back for quite some time. And so Twitter's actually, this has got a pretty good look to it, especially now that it's starting to poke up into this earnings gap. And of course, they've had some news in that. They got some new stuff coming out, but all that aside, I remember years back, there was a period of time, a couple years back where like, every other month there was talk about somebody taking over Twitter. And so, quite frankly, I'm surprised someone hasn't bought it out yet, you know. But be it as it may, looking pretty good here, quite frankly. There was a little bit of a gap up the day after it triggered, buck and a half over the actual, trigger line, and trailing stops moved up a little bit, may move up a little bit more today, and so far so good. Looks like it's trending up. And of course, last thing I want to mention real quick is that the trailing stop is basically initially is designed to hang back and to allow for like a normal sort of correction in the stock, like one that pulls back for a few days and bottoms out and turns back up. So that's why the trailing stop's not all the way up here at the trigger price right now, is because once the stock triggers in, the trailing stop is designed to hang back to allow for normal price fluctuations. So there you go. And then, like, way down the road, if it rallied all the way up here, then it starts to like aggressively tighten up, right? The longer that it's open and the bigger the move that it makes, that's when the trigger, or I'm sorry, the trailing stop gets more aggressive. So I think most of you guys know what I'm talking about there. Last but not least is XLRN, which has been open since back over here. This one actually, this is a good example of, let's see, right where my mouse pointer is. Hang on, let me look at my other screen here. Right where my mouse pointer is, this one triggered in right there. So you can see, a couple days before that, it closed just shy of the trigger price. Then the next day, basically opened at the trigger and had a pretty long range day. And then that following morning, it actually that's what I was talking about before. It gapped down, right? So it gapped down a little bit here. Even though it was over the trigger price, it was only a little bit over it. And then also you can see that, this is a great example of everything I was talking about with the entries. And then a couple days later, I mean, it traded at the actual trigger price, right? So this is one where if you had set a limit order, if you set a limit order at the trigger price, you would have gotten filled a couple days later at the exact trigger price. And then, of course, if you got filled at the trigger price because you set a limit order, then there's your target. If you got filled because you got in at the open the day after it triggered, well then, there's your target. And you can see that trailing stop has come up, and it's got this little W pattern, and the past few days here, it's starting to poke over the middle of the W, and so it's got a pretty good look to it. This you can see a lot of times on these charts where the stock, it sells down and then it reverses and makes a pretty significant swing in the opposite direction. Right? It typically sort of recoups a lot of, and you get these crazy days like this where you get, 4 or 5 days like really big drop and then ricochets right back up. And so this one's got a really good look to it. Trailing stops moved up. Um, and so there you go, well on its way. So anyway, there you go. That's a pretty good list of open trades. Most of them look like they're doing okay, quite frankly. And as we speak right here, as I'm looking over at my other screen here, literally, other than Intel being, down a penny, well, Intel's down a penny. That could change really quick here, but all the rest of them are green today, even with the market kind of, just doing a lot of nothing. It's actually the market's kind of done exactly what I was just talking about here. It sold off and then kind of bounced right back to where the sell-off started. You see that a lot these days, right? Market moves in one direction, moves down, and everybody gets all crazy bearish, and then it just snaps back to to around the level where the breakdown started, and then everybody gets all crazy bullish, and then you get another sell down. So here's the thing: is the next few days headed into a holiday weekend. I think people are probably now with everything opening back up and travel and all that good stuff. People are making plans, so we could be looking at a dull, few days here headed into the holiday weekend, so which is fine by me. So anyway, that's that. Thanks for tuning in. I will put the replay up on the show page here shortly because I know most of y'all actually are going to watch the replay. So until next week, have a great Memorial Day weekend. I'll see you here next Wednesday.